So you're thinking about investing in Texas real estate? Well, just imagine buying an unlimited number of properties with no verification of income. That's right, no verification of income. In this video, I'm going to dive deep into DSCR loans, which is why this loan product has become so popular in Texas and really around the country. If you stick around to the end, I'm going to share with you a consumer guide I wrote to ensure you get the absolute best deal on your next mortgage. So if this is your first time to this channel and you want to know everything about DSCR loans, then subscribe below and tap the bell so you can be one of the first people in town to know about the current market in Austin, Central Texas. Hi, my name is Mark Harris with Texas Mortgage Source, and I get calls and emails every day from investors just like you looking to make a buy and invest in Central Texas area, and I absolutely love it. So whether you're buying 1 month or 1 year, give me a call or shoot me a text, send me an email so we can explore the best loan programs for you. And as a mortgage broker since 1985, I've helped hundreds of investors around Texas, and I'd really love to help you as well. So more and more investors are turning to DSCR loans to buy rental properties, and it totally makes sense because DSCR loans are basically built for real life. They're built for entrepreneurs, self-employed people, people who write off a lot on their taxes, people with multiple properties, and people who don't want to hand over 80 pages of tax returns just to buy one rental. So in this video, I'm going to explain to you what's driving the DSCR boom and why investors love the DSCR loan programs, and also how it helps you scale faster and why this has become one of the most popular rental loan programs in Texas. And just out of curiosity, how important is it for you to have financing that doesn't slow down your portfolio growth? Let's get into it. Let's start simple. DSCR stands for Debt Service Coverage Ratio, which is a fancy way of saying the lender qualifies a loan based on the property's ability to pay it for itself, not your personal income. So instead of you providing income with W-2s, pay stubs, tax returns, etc., the property proves its income through rent. Just imagine how different investing becomes when the deal qualifies itself. Now, DSCR loans are popular for lots of reasons, and it's not just because investors love paperwork. It's because conventional loans can become a nightmare for investors. Here are the biggest frustrations. Number one, tax returns punish investors and business owners. If you're an investor, you've trained yourself to reduce taxable income through depreciation, deductions, mileage, expenses, etc., and write-offs, of course. And smart tax strategy makes you look broke on paper sometimes. So you can have $40,000 or $50,000 in the bank, great cash flow, and a strong business, and the underwriter says, sorry, your income is too low. And every investor is like, you mean I'm being punished for being smart? Exactly. Number two, conventional loan limits Fannie Mae and Freddie Mac typically cap you around 10 financed properties. So a real investor hits that wall pretty quick and says, hey, well now what? DSCR becomes the cleanest answer. And also DTI, which is debt to income, doesn't match investors' reality. This is the third problem. Debt to income is designed for consumers, but not for investors. DTI looks at your personal debt versus your personal income, but investors don't think like that. Investors think cash on cash return, debt yield, cap rates, cash flow, reserves, leverage strategy. The investor mindset doesn't fit neatly into consumer DTI box. Number four, the underwriter's death by 1,000 cuts. That's what I call it, death by 1,000 cuts. Traditional underwriting can be exhausting. Letters of explanation, business returns, K-1s, year-end to date P&Ls, multiple bank statements, CPA letters, and the classic line, please explain this deposit from 11 months ago. Investors just don't want all that drama. They want to run the numbers, make the decision, and close. That's the main reason DSCR has exploded in the last several years for investors. So why again are they turning to DSCR? Let me give you real reasons, the ones you're going to hear when you're talking to investors in Austin, Dallas, San Antonio, anywhere. Reason number one, DSCR qualifies on the asset and not the person. This is the biggest one. The property either works or it doesn't work. We underwrite the property. The lender is basically saying, show me a property that cash flows and we're good to go. How would you feel if your financing depended on your deal quality instead of your tax returns? That's the key. Number two, DSCR loans help investors scale faster. And here's why. There are two types of investors. The investor who wants to own 1 or 2 rentals and chill, or the investor who wants to scale to 5, 10, 15 doors fairly quickly. If you want to scale, DSCR makes growth much easier because it reduces friction that you're normally going to run into with traditional financing. Less documentation means fewer delays, fewer conditions, faster closings, and faster repeat buying. You can do it over and over. Number 3, DSCR is an LLC friendly. Most of these loans allow you to close in your LLC, and normal loans don't do that. Conventional loans require you close in your personal name, where these type of loans allow you to close in an LLC. That matters for investors because it's all about liability protection, clean accounting, separation of personal and business assets. And not every loan works this way, but DSCR does. Number 4, DSCR works very well for short-term rentals and mid-term rentals. Short-term rentals and mid-term rentals can be harder in conventional land. DSCR loans often allow short-term rentals using projections. In MTR, which is mid-term rentals, like traveling nurses using market data. That flexibility is gold in Texas because we have a lot of people moving around here in this state. Reason number 5 is DSCR loans support cash-out refinance strategies. So investors don't just buy, they stabilize property, they build equity, and then they refinance. And DSCR loans support rate and term financing, if you just want to refinance the loan, cash-out refinancing, and portfolio repositioning. And that's how investors recycle capital. Now I'm going to keep it real with you. DSCR is not perfect. The trade-offs usually include, number 1, higher rates than conventional financing, usually by 0.5% or more. Larger down payments, they usually want 25%. And sometimes they're going to come with prepayment penalties. But here's the truth. Most investors don't mind that because the alternative, sorry, we can't use your tax returns. So DSCR is often the fastest way to a deal execution, scaling, wealth building. So just imagine buying a rental property with a loan program designed for investors instead of trying to squeeze your investment strategy into a consumer box. It doesn't work very often. So if this video was helpful, hit the like and subscribe and share it with another investor. And hey, but before you go, I want to give you something that can really help you. If you're shopping for a mortgage or you're planning to soon, I've put together a simple, easy to read consumer guide called The Truth in Lending. And it breaks down exactly how lenders price loans, how to compare quotes the right way, what fees actually matter, and how to avoid getting overcharged. There's no fluff in it, no jargon, just the stuff I wish every buyer knew before they started shopping. And because you've watched this video all the way to the end, I want to give it to you for free. So just comment your email below and I'll get it out ASAP. Kind of use it as a cheat sheet anytime you're comparing lenders or trying to make sense of rates and fees. I've been doing this for over 40 years, and this guide, I promise you, will save you time, money, and a whole lot of stress. So if you want the truth, and I mean the real truth on how to shop for the best mortgage, go grab a free copy. Enjoy it and call me with any questions. You know where to find me. I'm Mark Harrison with Texas Mortgage Source. See you on the next one.